In this video, we're going to talk about Rivian, and the stock continues to move higher. If I look at the monthly chart, you know you are at a bottom when you start seeing price form buy levels. In the case of Rivian, a buy level was established back in May of 2024, and we're just going to go straight to the weekly chart. You have this drop, base, and then a rise in price, only to hit resistance at $18, which was support in the past, before price retraced roughly 89% before hitting another level of interest at about $10.40 on huge volume. Now, yes, price hovered around this level for a better half of a month and a half, but that was because the smart money was getting all their unfilled buy orders filled. And then the week of November 25th, you had a gap higher and a go, so gap and go. On the way up, price did form a daily buy level, and we can see that on the daily chart. We also have now the makings of a golden cross. That's where the 50-day, which is in red, crosses over and above the 200-day, which is in yellow. And you have this rally, these basing candles, and the rally out. Price attempted to come to that level twice, but couldn't. And then on Friday, price just gaps higher. Why? Well, let's get into the news. And then we'll look at targets, so stay tuned to the end. So Rivian said Friday that it delivered nearly 14,000 EVs during the fourth quarter, bringing its yearly sales volume to roughly 51.5K electric trucks, and that was within the company's prior guidance. However, Wall Street was looking for 13.4 for the period and 51,000 for the year. Rivian stock had a rough 2024. Shares ended the year down 40% from 2023 and nearly 90% from their all-time highs of $100 when they debuted it back in 2021. At one point, Rivian market had a higher market cap than Ford and GM combined, which was ludicrous. So after its blockbuster IPO 3 years ago, the Amazon-backed EV maker had faced a mountain of obstacles. First, it grappled with a shortage of necessary computer chips. Then there was a wider market shift away from electric cars, just as competition from mainstay Tesla was heating up. The company has undergone a massive cost-cutting campaign, slashing its workforce in multiple rounds of layoffs and redesigning car components to make production less expensive. However, even with these efforts, Rivian's operating losses mounted in the past year. In the third quarter last year, revenue fell for the first time since it went public, dropping 35%. Now, you do have some analysts on Wall Street. You have this one gentleman from RBC Capital. He has a neutral rating on the stock and a $12 target over the next 12 months. Again, prices are trading above $16. Then you have another analyst at CFRA analyst. His name is Garrett Nelson. He maintained his sell rating on Rivian shares with a price target of $8. Noting Rivian's bottom line losses are likely to continue for the foreseeable future. And I agree with that. You know, the car business is very capital intensive, and you need a lot of capital and economies of scale in terms of making cars to get to that break-even point. Nevertheless, if I pull back to the weekly chart, the charts are suggesting the next major level of interest is going to be this $18 level. Again, that's where price shot up to and then reversed. So for those who have been in since about $10, awesome stuff, but take some stuff off the table at $18. Thanks for watching. Subscribe. Please like the video.